Good morning and welcome back to the Opportunistic Trader for November 13th, a Tuesday, after a smash job Monday. Supposed to be quiet. Straddles were pricing only about $14 or $15 and they went to $35. So S&P was down over 50 points. We got a slight bounce back this morning. S&P up about 1150. It was higher on my drive in this morning. And NASDAQ was up about 70, but it's this Apple effect. Apple is through the 200-day or, on it, but I think slightly through it. It's kind of bidless. Everybody's downgrading the stock or downgrading iPhone sales, so we'll see how that goes. The secret one really is Goldman Sachs, and that's trading at 204. It's funny. In 1999, 2000, when Spear Leads, a company I worked at, was bought out by Goldman Sachs.
I remember that.
The stock was like 145 or 150, and that was 18 years ago. And the stock's only up $50 basically in the last 18 years. I asked Mike yesterday, I go, are there any splits here? And there have been no splits or anything. So really, that's pretty unbelievable. The only guys getting rich there are the Goldman employees and partners, because the people owning the stock are up $50 or maybe 25-30% in 18 years. I mean, that's literally 2 or 3% a year max. I mean, that's like owning a bond with risk. So, that's interesting to point out at this point. Yesterday we got off, as we would say, the schneid. We had a winning Apple trade, so it takes us out of our losing streak. Today, don't see really anything. I'd like to sell some strength. I still think there'll be more weakness in the market here, but again, when the computer gets rolling in one direction, it makes it very, very difficult to frequent those trades. Overall, the dollar is a bit weaker. The euro is back up about 50 pips, and the British pound is back to 130-ish. It's 129.70, just like it always is. I mean, I've actually never seen anything like it. It just does not move. It's basically rigged. The Canadian dollar looks very, very weak still. It's bouncing a bit, but it looks like it's nearer the highs of the year. And overseas last night, Nikkei was down 3%, but I assume it was closed the day before on the cash market, and it was down a little bit overnight. And the China markets were higher. Gold is flat, oil is down for the 12th straight day, but significantly off the low, $1 or so off the low that it made yesterday, and that gas is the big winner, as it's been all month. It's literally up 30-something%, 35% in a month. That's trading up 7% at $4.03, 3.5 cents. And overall, today is not an option expiration. We could look at the straddles, but it's really a 2-day deal, and the straddles are pricing in about 30. When we had extreme volatility at 28, they were pricing in 50. So they may be a tad bit low. Market is slipping. It's been slipping since I got in. The S&P was up 19 or 18. Now it's up 10, and the NASDAQ was up 60. It's now up 30. Apple is crushed. It's down another $2, ripping lower. It's going to be interesting. I don't know the exact date. It may be today or later on this week, but the filings come out for the quarter. Obviously, they're old, and it's really not that impactful. But for one thing, in Apple for sure, it will be interesting to see if Buffett made a move. Obviously, he didn't sell it, but if he didn't buy any more, it would be interesting. And I think it's a really big portion of his book right now, the position. Now, obviously, the stock is down 20%, so that position just went down by 20%. I mean, the stock made a high almost at 240. It's 192. It's down $40. it's down over 20-ish% from the high. So we're in interesting levels here. The only problem with Apple going forward is that it's not going to release guidance or anything until earnings. So you're sitting sort of in a,
correct,
in a dark cave figuring what are they going to do? What is the number? And these analysts, listen, when they had everything, they were off by like $2 on the earnings. They're looking for 3, it came in at 5, So
right.
I don't know what's going to happen when there's no guidance, no direction, no reporting of sales. If they have an iPhone release, they're not going to release the sales numbers. So
I think on that overnight, Goldman released that they think it's going to be 6% lower in iPhone sales next year.
I mean, I don't know how they know that. They don't even know. Maybe they come out with the super phone, the phone that, does everything. How do they know next year, for the whole year, what Apple is going to do? But I guess,
I think analysts are going to start reacting to Apple's lack of transparency. And an analyst who's not fed their bone, fed their daily information or feel like they're in the flow, they're going to tend to, I wouldn't say maliciously punish, but they're going to tend to be less kind to companies that don't give them, and I don't mean this in an illicit way, access to information.
But what
can you do if a company's giving you less access? Analysts will tend to pull in the reins, and it's kind of like Wall Street punishing them for lack of transparency.
But my question is this, okay? Back in the day, and I'm going back a bit, but the analysts had to figure everything out. That's what made an analyst great. They did channel checks, they did this, they did that, and the better ones were the ones that became, in the market realm famous.
I'm not disagreeing with you.
And now, like for Goldman to make a call like that, I mean, I understand it, but I mean, I don't know how they're making that call,
Okay, right. And I guess we'd have to drill down on the report. But to your comment, once upon a time, analysts made their assessments quarter to quarter. They did their work. I used to work for CFA, and I was the knucklehead who used to call up after unrolling faxes, and I would call to embed a humorous story. I would call CFOs with a list of incredibly intelligent questions coming out of a 20-year-old's mouth. Excuse me, what do you expect your price to EBITDA to be this year? And these people will be answering me because of who I work for. But the reality of it is this: the analysts, as you said, in the past had to do their own work, and companies didn't have to be so transparent quarter to quarter.
Wait a second. Were you getting illegal information from CFOs?
No, but that's how you had to do it. An analyst, they would take calls from analysts they liked. The companies were actually in charge a little bit. They had more strength. They would take calls from analysts they liked. They wouldn't take a call from Vinny Lancy. They would, however, take a call from Martin Shafroff, partner at Lehman Brothers. So when I called on behalf of Martin Shafroff, this poor CFO had to listen to me ask him questions, But the reality of it is the analyst that worked for the partner at Lehman would do his work based on the information I got. And he would come out with an opinion, and Lehman and, the companies would put out their research, as you said. And then what ended up happening, this is my opinion, but, I went through this, things became more quarter to quarter, and companies got smart, realizing that they had to guide analysts. The more information was better. And now what we're seeing with Apple, if you want to call it a trend, I don't know, but we're seeing a return to we're not living quarter to quarter by what you say. We're tired of getting whipped around, and we're going to back off a little bit. I think that's lame coming from Apple, but I think the analysts are fighting back because they want that information flow. I'm just saying.
You think so?
If we go towards a less transparent market of information on a day-to-day basis, then you're going to probably get less day-to-day volatility and more knee-jerk reactions when earnings come out.
Probably so, but I don't know if all this stuff was released years ago. I think that it took them months or whatever to compile all of the information. Now it's coming out, because it's all computerized right away. And Apple basically is saying we don't want to live and die by the fact that how many iPhones we sold on a new release that day.
Right. Right.
which
I agree.
is,
I agree. I agree.
you know,
So as a trader, as a day trader who's about to form a bias, how can it be good for the stock when the most widely held stock in the world by my future employer, the Swiss National Bank, as well, as you joke all the time, how could it be good for them to become less transparent as the company is a bellwether, for lack of a better word? How can that be good when you have companies like GE failing? When you have, let's face it, Apple is more of a bellwether than an aggressive internet stock. How does that help them by being pulling back? I can see Google doing that. We're going to take ourselves public, but Apple's, it just reeks to me of a company that's making, I think, a tactical mistake, and that makes me want to short it.
yeah. I mean, many men have come before you and tried that. It hasn't worked
I
too
know, I
well.
know. That makes
But
me want to short it.
but it's
I also
interesting.
have a burial plan and money set aside for that if I get run over.
Mhm. Well,
But
but I would say this, okay, as a day trader, and this is important to understand. I'm not, and people, people that are on the site and some people that work with us have asked, you know, recently, like for me, like, why are you buying? Why are you selling? And most of it really is price action of that moment, that day, that market against another market. For me, Apple is an example of that. I mean, right now the market is seller. Okay. You could probably lean seller until the market turns. And then if the market gets a little bit more out of control on the downside, we potentially might want to buy the name for a trade. So, we're really judging this off of price action levels, looking at potentially the 200-day, looking at where it held before, what it did off earnings, like where the last earnings release was, where was the stock? Okay, maybe it was 188. So we'd look at the 188 level, but it would be more of that rather than looking at a fundamental analysis on the stock, of where it may be, because we're looking to make $1.50 to $2. I mean, that's our trade,
right,
and
agreed.
a lot of times, if that move happens quickly, then we can get bigger in the position. But the way that we trade it is that we want to take that $1.50 too. If it comes really quickly, we might want to get bigger. But if it takes 2 hours to make that trade, we're in that trade. We're not getting bigger. So it's sort of, looking at price action, looking at strength and weakness for that day. And then tomorrow comes, and tomorrow is a brand new day at the way we look
Right.
at things,
Agreed.
and we may still be in our Apple position, okay, but we're looking at it differently because the price action for that day, which let's just say it's tomorrow, will be Wednesday, and that's Wednesday's price action. So interestingly enough, that's how we look at it. And I'm watching Apple as we're talking now, and it's just all sellers. So the determination you have to make as a trader is, hey, listen, we like to mean revert. So this is a pretty big move down, and we potentially would want to be a buyer, but we're not stepping in front of this thing in any manner, okay, at this point, because the levels just don't look that good. Maybe down 4 or 5 today, or even 3, depending on the timing, might be a better level. So, on the buy side. So we're just looking at it for now, and we're not the type of traders, or I'm not the type of trader that will buy Apple at 192, okay, sit in it, and watch it go to 202. Now, there are a lot of people that do that, and I respect that, but that's not what my game plan is. My game plan is to, buy the stock, flip around, and just trade it, and potentially trade it on both sides. Those are the better days, especially in S&P, when we're buying and selling 10 times a day. That means the market's been both sides of unchanged. So, I just wanted to point that out. And looking at Apple, people are like, oh, it went through the 200-day, and it's bad. Yeah, you know what? It is bad. But, it's 192. It's not 232. So,
Right.
again,
Right.
this gets people in trouble. They may take a little bit out of it, but if you're going to stay, you might not be faring well. But
Right.
but overall, today is a quiet opening. Again, market's up 9. It probably will trade lower. Basis looking at where the stocks are right here, and I don't see much up. Amazon was up 20 when I walked in. It's up 11. It could be up like 5 on the next tick. Google's up 6. It was up 11. Netflix isn't really up. Facebook is up 40 cents.
On that, Home Depot came out with good earnings, but it'll be interesting to see the price reaction on that, because initially it was up like $5. We're only up $2 now, and the S&P futures, especially after that Home Depot news kind of came out, we traded up to 50 and a quarter. We're now 13 points off that high. So just in terms of price action, Home Depot will be interesting to watch today.
I think that S&P high
That's a
may
good
have
point.
come over the European opening.
Yeah,
I
Larry,
think it
circling back to
traded-
your comment about Apple and about trading in general, if I make a comment like that makes me want to, that's me actually saying that makes me want to. If I want to on for a macro reason, that means people are already selling it. So to your point, like for example, today Apple's weaker, Goldman Sachs comes out. A short-term trader may want to sell it, but you know what? If you know it, everyone else knows it. It would be nice to see.
I'm not a seller down at 190, 188.
No, I'm not saying that.
I'm just saying I'm not a seller. My decision today, okay, unless obviously we trade up.
No, when I say you, I mean one. I mean anyone, like a listener, may play it from the short side, but it's also, if the market's discounting that because it's too late and the news is out, it might be.
But my question is, if you're playing
after that news is digested,
I get it,
and buy it.
If you're playing it at 191, okay, what are you looking for? It's already just dropped $45. I'm just Vince. I'm just
saying.
I understand.
I'm giving the rationale to not sell it. What I'm saying is, anyone who sees a Goldman Sachs, anyone who's an amateur retail day trader sees a Goldman Sachs. I just want to focus on the Goldman Sachs news. Goldman Sachs headline, Apple's lower, let me sell Apple. You know what? You might sell Apple. You might sell it in a hole. You might make a couple dollars. But the better trade would be to let it settle down, I think, and see how it reacts after that news is digested, and look for, today's the type of day, and I'm not a regression to the mean trader normally, that I would look for how market reacts after the news is digested. Because after that news is digested, it may be in a buy for a $2, $3, $4, $5 pop. That's
I don't think we're gonna get that, but you could probably trade around in this thing for $1.50 to $2. It's a good trader. Listen, it may be a short here. It might go through 190. It's very possible. I think
you want to hold on to
earnings
it for
is
5,
188.
6, 7 days, but if you're going to hold it for 5, 6, 7 minutes, it's a matter of what you're moving on to.
On that, we're going to be speaking with Tom McEntee today at 1:00. He's been all over Apple, and weeks and weeks ago, Tom said we're looking at 192, and that's when it was above 220. He was looking at that level. So Tom is getting his 192, and I saw he got a little eager yesterday and inched into some around 194, but said he was looking to add more at 192. So, it'll be interesting to speak with him at 1:00.
It's 191.76.
Yeah, I commented on Tom in the Gold Fix. We actually talked about Apple in the Gold Fix today, and it was like, okay, Larry had a good trade in Apple yesterday. Tom had a good macro bias and a good trade yesterday in Apple. And I marveled at the fact that if Tom does a trade that's not involving 15 different options or 3 different expirations, and it's a direct buy or sell of the stock, I really pay attention.
But I think he was covering gamma.
I think so as well. But the fact that he picked that level, that's kind of cool.
Yeah. No, he's all over it. I think I'm looking more at the 188 level. I don't think it gets there on this move, but it's early. Obviously, it's half an hour-ish before the opening. Stock has done nothing but go lower since we've been on the air. It was down about $1.06. Now it's down. It's actually bouncing a bit. It was down $2.50. Now it's down $2.25. It's not a bad level. But the one thing that I'll tell you, and I have some friends at some retail shops, the Charles Schwab Fidelities of the world. And, this stock is traded with so much leverage on a day-over-day basis that it's unbelievable. Someone that has like a $5 million account is long 20 million Apple or 15 million Apple. They're using leverage and they're levered in a huge way. So, we're back through levels of the last earnings. And but the truth is, I remember in February trading it was 150, 155. So, if it's going to take out those year lows, got a long way to go. But again, I'm not, the Goldman downgrade down 40 from the high is typical. And, it's sort of, closer.
Chasing the news. And yeah, that's the way it works.
Closer to the end. And I don't know, I didn't read the actual report, so I don't know, if it was an actual downgrade of the stock or if it was, just downgrading the iPhone sales numbers. But, we'll get better color on that as well. But, as we've been on the air, the market's done nothing but leak lower. It should
Can we agree on this? Can we agree on this? All this unknown about Apple that's recently been introduced just makes it for a better trading stock.
Well,
it really does.
I gotta be
Here's
honest
a little
with
bit
you.
more info on it. Apple's price target was cut to 209 on lower iPhone estimates at Goldman Sachs. They said the iPhone unit estimates after the Light company reduced its December quarter revenue guidance by 17% at midpoint, citing reduced shipments. One of its largest 3D sensing customers, which he assumes to be Apple. Overall, Goldman Sachs reduced their FY full year 2019 total iPhone unit estimates by 6% and cut its full year 2019 revenue forecast by 3.5%.
But they have a 209 price target. The stock's at 192.
Well, it's the same thing as like the Caterpillar before, where they were, downgrading Caterpillar from like a 200 price target to like 180, and Caterpillar.
But we know why that happens, and we know why that happens. And for anyone who's wondering, anyone who looks at that from precious metals and commodities, it goes like this: we make a price target of 250, okay, and then we see bad news, and then we start saying, well, we can't drop a price target to 190 immediately, because we lose all credibility. So we start saying the average price will be 220. The average price will be 209. And by the time they get to the actual price, it's probably time to reverse your position. They can't immediately, downgrade it because it shows they're not on top of it, and they lose their job. So they have to gradually trail it. It's
right. But I've never understood a downgrade of something when it's, $17 lower than your price target or 8%. Why is that a downgrade?
Agreed.
So, yeah, I mean, this is what we see out there. Again, it's the pile-on trade. We'll look to buy Apple today for sure. Stocks don't look good overall here. The S&P is holding up, probably up about 2 and something for the year. If they come in here for the year, they'll dance. But, there's a lot of stuff outside, the, regular, minutia of the market. I think this Mueller probe is going to start heating up in the next couple of weeks, definitely. Meanwhile, that's something I want to really discuss. Like, this guy, he's been looking into this for 2 years. What's he waiting for? The guy he's going to be out of office he's out of office in under 2 years now.
It's funny you just brought that up. I was about to bring that up on your behalf, because a year ago you were saying that exact thing to me. You were like, it's taking him a year. What's taking him so long?
It's ridiculous. Listen, Trump has a right to be pissed. Either do it or don't do it. What are they doing? I know he needs. Why doesn't he work 24 hours today and 24 hours tomorrow and get it done? What?
For
what
everybody
the hell?
listening, Larry had this exact conversation 1 year ago, and here we are a year later.
Oh, it's just bizarre. It's actually bizarre, and I don't know what's taking so long. I don't know what they're looking to find. I don't know why they can't find it.
It's so convoluted. I have no idea what's going on anymore. I really don't.
No, but my point is, why should it take 2 years to do anything?
Because
2
you're a lawyer and you
years?
get paid by the hour. Sorry,
I
apologies to any lawyers. Can we
I
talk about the VIX, and if you see any correlation that would be worth looking at today?
The VIX futures are about $1 under, 80 cents under, which is less than it's been the last time down. Last time down we were at 25 VIX and the VIX was at 19. Now it's at 19 and we're at 20. So, it's leading me to believe maybe there's a little bit more downside here. I really think that the market is going to struggle into year end with whether it's going to be up on the year or down on the year. And
Right.
that's something that's going to be, it's like the DiMaggio streak. Are they going to break the streak this year of 10 straight up years or whatever it's been, or, and that's really the question. I'm hoping for trading that we actually, unless we're going to be down significantly, that we would be up this year, because that would create a really rock and roll 2019. And, I'm looking forward to that. Here we're, it's noise. You'll see the computer start trading on the opening. If they're all buyers, you can't get in the way. If it's all sellers, you can't get in the way. I mean, yesterday, actually, like looking back on it, and we missed it. We really didn't short anything on the day, because it was down like 20, then it was down 30, then it was down. It just went so slow for that type of move, and the whole thing's crazy, because when we were coming into the election, they were like, if this happens, it's bullish. And I was like, it can't be bullish. And you know what? The market is lower from the election. I mean, it definitely went higher and killed people, but it's now lower. And, Mike and I discussed this the other day. Tell me where Apple was when the S&P was at 2,600. You have any idea? It's 199 now. The S&P was 135 points lower, and Apple was 35 or 30 points higher. So, I mean, that to me is amazing. So, I know a little of that's Amazon and maybe, Netflix, some of these stocks coming back a little, but I'm looking at Goldman Sachs and Apple so much lower than where they were when the market traded 2,600. So those are your real bellwethers. I mean, your financial bellwether is like J.P. Morgan or Goldman. And
the question that begs is, if you think like I think, in the sense that Apple is like you said, Apple is a bellwether, and the stock market is now rotating out of Apple into more risky stocks, then that's not really good, considering we're not higher. You know what I mean?
Well, Tony Greer actually, before Apple earnings, and remember the equity markets were under pressure. He actually thought that if Apple disappoints and the market goes and Apple goes lower, that would be kind of game over for the markets. But one comment that Larry often makes is the shifting of the knob and changing and looking at something different, because Apple, like you said, is $20-ish lower, more than $20 lower from earnings, which is the bellwether of the world, and the market's where it was, if not higher. It actually is higher. And so it's that's an interesting dynamic change. One thing we haven't spoken about yesterday, the backward-looking IMF came out, and they really pointed towards a slowdown in the global economy, and basically gave a pause, kind of the yellow light to the global equity markets. But they've always been kind of backward-looking and not a great indicator. But they talked about the strong dollar being an issue. They talked about the trade tension between U.S. and China being an issue, and they were very cautious about global growth and global equity prices, really. And so that'll be interesting to keep an eye on. Yesterday's Goldman Sachs news with Malaysia is very interesting to continue to monitor. Ultimately, more news is going to come out, but what it's coming down to is Goldman Sachs brokered a deal with Malaysia, and they made billions of dollars on the deal, and Malaysia lost money, and now Malaysia's coming to them and looking for recourse here. And so we'll see how that continues to play out.
You know what? They should
get the bus ready. People are getting thrown under it.
Right. They should go to Greece. I mean, Goldman laid up the country of
Mike.
I think
the lines that you have to read between are, whenever the headline says ex Goldman banker, he gets thrown under the bus. When it's former Goldman banker, that means they'll represent him. So I guess we'd have to focus on that.
Yeah.
You know.
Yeah. If you're an ex-Goldman banker, you're going to spend all your money on a lawyer.
Right. If you're a former Goldman banker, then you're still part of the tribe. Actionable levels. NASDAQ after the first hour. I'm personally looking to buy above 69.09 and to sell below 68.81 after the first hour. I don't know what your thoughts are on that, Larry. If you want to correlate that with the S&P or anything,
I would probably do the opposite.
Exactly. No, exactly. And those numbers I give are inflection points. No, those numbers are inflection points. I'm looking to buy. Might be.
I understand, but if you buy at 69.09, what are you looking to do? You've already missed
the reason I give you that level is because, okay, I'm not. If the market is after the first hour above 69.09, but below, that's just that puts it on the radar.
No, I get it, but I'm asking you a question of if you buy at 69.09, okay, which I'll be short before that. If you buy at 69.09, which is
no. I'm sorry. I read the wrong number. Sorry, 68.93. 68.93. That's my number.
All right.
My mistake. I read the wrong number.
That's fine. 68.93. So you're buying up 70 or 80. What are you looking to make on that? $20, $30?
Well, that's okay. Well, that's the point. That's the likelihood of that is low. But if I were to buy,
it's not. It could happen before we get off this air in 5 minutes.
Okay, these are also. I'm trying to answer the question. That's
not even.
Point.
But just let me stop you. That's not even through today's high. So there is definitely a possibility that could happen. But this is just my only question to you, just so our audience can gather it. What are you looking to make? What's the risk reward on that? Like if you buy them at 68.92 or 3 or whatever you said,
right?
Are you looking to sell at a new high after it breaks a new high? Are you looking to make $20, $30? What are you looking to make on this?
The system gives me the stop first, and then from the stop I multiply that by 2, and that's my target. So why don't I just lay this out? This is how it would go down using the NASDAQ. If the NASDAQ on an hourly basis settles above 68.93 spot 58, and I see it at a level that's reasonable, and by that I mean, let's say it settles at 6,900. Okay, so that's 7 handles above my level. I buy it with my stop at 68.93 spot 58. I don't buy it because it's through 68.9. I don't buy it on the way through. That ends up being my stop. So the reason that this system doesn't work sometimes is because it'll blow through 68.93 spot 58, and by the end of the hour, I'm just making a number up. We're at 69.75. Well, I'm not going to buy it because the risk reward isn't there, but the level is 68.93 spot 58, and that would be my stop. So if I bought at the end of the hour, the market's trading, let's say 6,900 even. I've got 68.93 as my stop. I take that 7 handles and multiply it by 2. That's 14 handles. My target in the next 3 hours is 69.14. The reason it's not an automated black box is because frequently when it works so fast that you don't get your good risk reward. You don't get a pause. And the reason that you don't buy it when it's 50 handles above your level is because of things like you say. It's extended. I want to go back, it might regress to the mean. So a lot of times, these are not black box systems. So if we settle above 68.93 spot 58 is a volatility system. And I'll just, for example, say below 69.25 in the next hour, I will look to buy it. My stop will be 68.93 spot 58. I'll multiply that by 2, sometimes by 1.5, and that's my target. So it is a volatility momentum system. That's on the hourly. Some people may say, well, you missed it because it went so high. I'm like, yeah, maybe I should have been looking at a 30-minute chart. And that's my mistake, or that's my bias. The downside, which is further away, but not so far away, 68.26 spot 54. And I look at this chart and I'm saying to you, because of what you're saying to me, for a different reason, I say, these are my levels. they're low risk reward probabilities, even if they're triggered, because they're so wide. On the S&P, my levels are, give you an idea, just intuitively, you can see that they're, uh, uh, for me, a little bit more reasonable. It's 27.46 spot 50 if we close an hour above that, or 27.26 spot 60 if we close an hour below that. And those give me probably better risk rewards because they're so tight. Those numbers are inflection numbers. You may see something when it goes 60, 27.46 spot 50 above that and say, yeah, that's momentum is exhausted. You're looking for it to regress to the mean. I'm looking for momentum to continue, and that's why I put tight stops. By the way, I am using this system now to regress to the mean, and I haven't put out a lot of signals on it, but the ones that I have been right, and I've only traded one of the three that I've seen. Just giving you levels so we can discuss it, which is what we're doing now. I don't see any technical reasons for me to be long or short the S&P. I'm just looking at potential for momentum.
Okay, so it's
You know?
just grabbing the momentum. I'm just trying to figure out how much you try to get out of it. You know,
Right. Well, the answer is almost always okay.
but you're
It
saying
is
twice as
always
much as
a
the
multiple
stop,
of the stop. The
right?
stop is
So
generated before the target.
right. So if you buy it at
And
93, what would be your stop potentially?
okay, so we're back on the Nasdaq.
Well, yeah, I mean that's the one you just gave
Okay,
the
well, fine.
levels
That's
on.
fine. We'll stay with that example. Okay, so let's say an hour goes by. All right, and the I'll give you two scenarios. The Nasdaq settles on the hourly bar at 68.96. That is for me a home run. I'm going to buy it the first print of the next bar or close to it, and I'm going to have my stop level at 68.93 spot 58 or a little bit lower. And you're going to say, or anyone could reasonably say, that's a super tight stop. And I'm going to say, yeah, it is a super tight stop. Maybe I would, move my stop a little bit around from that, but I usually stick with the stop and I go, all right, I'm risking X amount of handles on my stop. I multiply that by 2 and I put that above, and that's my target. Now, do I get out at that target? Yes. Should I consider trailing stops when I get my level? Yes. But I like to keep it simple, especially for the subscribers, because trailing stops can be tricky and much more intuitive. Another example where I would want to get in on a great signal that gives me a shitty, excuse my French, bad risk reward is we got that level at 68.93 spot 58. The hour closes at 69.20. Do I want to buy it? Well, the system says I should buy it with a stop at 68.93 spot 58. That's ridiculous. I'm not going to risk 20 to make 40, even though it could be a good trade. That's beyond the amount of money I'm willing to risk in a day. Make sense?
Yeah.
And people who understand constant volume bars or constant weighted volume bars know that that's the way to go with a system like this. And I'm working on that right now, trying to come up with that. But the cool thing about this type of trading, whether it be momentum breakout or picking spots to regress to the mean, is it applies on different time frames in all markets. And I can use it for that reason. So I'm just starting a conversation here and saying, those are my levels. You might want to fade them. You might want to go with them. But those are my levels for today. And I don't really see anything compelling is what I want to say. But I just wanted to throw them out there.
Okay. It sounds good. I appreciate it. We're getting closer to the opening. So, Mike, you want to go over the schedule today?
Yeah, schedule. We have Tony Greer coming up at 10 o'clock. A lot of interesting things to talk about, from Apple to, he's been all over a lot of different sectors. So if you have any questions, Tony, who's been on often, talking about a lot of different individual names and sectors, he's coming on at 10 to talk about equities. Then at 10:30, we have Dale Pinkert, who has interviewed tons of traders on his website, has a lot of market information. So we're going to be speaking with him about his experience talking to other traders. He's an interesting guy, so we're speaking with him at 10:30. Then 1 o'clock, Tom McEntee. Tommy Mac talking Apple and a lot of different great information, risk-reward opportunities in equities and option markets.
Yeah, Tommy Mac is awesome. Look
Larry,
forward
I want to
it.
throw on the Apple concept. Like,
Mhm.
here's a regression signal that I have that actually, if you look at a chart, it makes sense from a technical point of view. For me, if Apple settles above 195.09 on an hourly basis, it's a signal to not be short. That's how I look at it. It may be a signal to be long for some people. Maybe you get long with a stop out on a new low, but it says to me it will be a negation of downside momentum.
Oh, that would
So,
be that would be a $4 up move from here. Uh, looking at
which
it,
might be
it's
something to
like
fade.
3%. Yeah, no, we'll keep an eye on it. We're looking to buy Apple below 190 for a trade. Other than that, I don't see much. Facebook looks terrible, barely bouncing. Same thing with Netflix. There probably is a leg lower here, just looking at these stocks. But like to see the S&P go up a little more and then potentially try to short it. Goldman looks heavy again through
Right?
yesterday's low. But we'll keep an eye on everything. And
Home Depot is definitely going to be one I keep an eye on here. We're only trading up $1.50. We were trading about $4 higher before. Everybody that I've read so far says solid numbers. So if we can't get good price action off of solid numbers from a bellwether like Home Depot, it'll be on that one.
And I think that's really valid. You've got strong numbers that the market rallied on and is now staying focused on. Is the market looking at future predictions, or is the market just overbought, or you know what I mean, or is it a dead cat bounce after a long sell-off? That's important. How markets react to numbers, right now, or how markets are reacting to reports. So Goldman comes out with a bearish report on Apple. It's just throwing, kicking them when they're down. And it might be the sign that it might be over. Meanwhile, you got a bullish report that comes out of Home Depot. Home Depot pulls off. Do you want to buy the dip, or do you want to sell the rally, or you want to sell weakness? There are trades here, and I think I think that industry should be noted. Home Depot would be what? Lowe's, and is there any other company that would be relevant to their industry? That's directly relevant, I should say, as a competitor that you
I
know of,
think
Mike?
Lowe's.
Well,
So I don't mean to put you on a
Lowe's is
spot.
next week. Lowe's is coming out next week.
And then we should ask Tom about that, because he likes to play options before earnings. That might be cool.
I'm looking forward to earlier in the call. People didn't realize Vince did his 20-year-old Vince voice. I'm looking forward to you working on that.
That was
good. I think the 20-year-old Vince voice working for like a white shoe firm on Wall Street was more like, "Yo, Mr. CFO, my name is Vince Lancy, and if you don't, give me these reports, my boss is going to be very upset."
My name is Vince. I'm only 20. I don't really know what I'm doing, and my boss told me to get earnings information from you before it comes out.
Oh, let me tell you, they would say to me, "Why isn't Martin calling me?" And I'd say, "Well, he's in the middle of, he's like picking out furniture for his new apartment or something. He's in the middle of a conference call with, I don't know, the Shah of Iran or something like that,
Exactly.
But meanwhile, I'm unrolling faxes while I'm talking to CFOs. It was hilarious. I'm like, "Hey, they let me through." "Yeah, that's because you dropped Marty's name, idiot. They don't care about you." "Oh, okay."
Well, just to get everybody ready, it's 15 minutes to the opening. S&P really hasn't moved much. NASDAQ up 30, S&P up 9. Probably rally a little off the opening and then maybe look to fade. I'm hoping we get that kind of trade, but we may not. I mean, things don't look so good. The DAX is only up 30 points. It was up 100 when I woke up this morning. So Apple is down 270 on the lows of the morning, so it's going to press through that 190 area. And it's going to be interesting to see Buffett, what he actually did in the quarter, because really I don't think he bought, because the stock during this quarter up until 2 weeks ago was above 2.25. So I don't think he added, but it'll be interesting to see if he actually made some sales or what the story is. I think we're going to try to find out when he reports that stuff, but I know a lot of these filings.
If he didn't sell, there's your point. If he didn't sell, and Apple is playing a little bit of a game with the analysts that they have some new product on their wraps that's going to come out, that's going to be like some innovative product, that will catch all those analysts by surprise. I think Apple's playing games, and if anybody's on the inside, it's Buffett. You know,
Well,
if you didn't sell,
Buffett, if you really think about it, that's what Buffett wants. He wants it for his own company. He doesn't want to have to report. He doesn't even want quarterly numbers. I mean, he wants yearly numbers. He doesn't want
that's probably the most insightful thing to hear today. He's probably happier that there's less speculators.
No, he's 100%. He doesn't want Apple to have to report every time they sell a phone. He wants
he's
them
got
to
a
run
private
the business.
line to Apple anyway, right? I mean,
I will tell you, I will throw this out, and then we're getting off because it's close to the opening. I would say that GE is right in this guy's wheelhouse right now. It would not shock me if he took a large stake in GE. Or, the company only has a 70. I think their debt's too high. That's the problem.
They have 300,000
No, Buffett's a white knight
employees.
type. He definitely could do that.
Right, I'm saying, but I wouldn't be surprised if he took the whole company. It's like it's a $70 billion name. He's been looking to buy $100 billion company for a long time, and I don't know what their debt service is or anything like that. I don't think he wants to deal with that. But overall, forget buying a stake. He could buy the whole company, $12 a share. That's where it was a month ago. He'll dance. $90 billion. He owns GE. The company. Let's put
a pin in that because that's totally in his wheelhouse. And if I can add some color, over the last 5 years, Buffett had been also accumulating private auto dealerships and publicly traded auto dealerships. And I'm saying, why? Nobody's buying cars in America. He also owns trains. He's looking at international trade, selling cars to China. This was like 5 years ago. So a lot of the work he's doing is looking towards manufacturing products that can be sold overseas. And GE is a brand that makes stuff. Maybe they don't make a lot of stuff anymore, but you could start seeing GE refrigerators in Chinese households when this is over. This is totally in Buffett's wheelhouse.
I don't even think they want to even do that. I think they just want to do aerospace. I mean, that's their deal. But again, I mean, how this guy's not buying the stock here is beyond me. I want to go on record saying this is right in his wheelhouse. So. Obviously they have issues. It's interesting. I called my broker this morning and, for my personal account, and I wanted to know where GE bonds were. And it's interesting. He sent me a chart, which I could probably show, but can we flip this to this?
Flash it. There you go.
Okay, you see that chart? I don't know if you can.
Closer and a little. There you go.
Okay, you see that? That's GE preferred. Okay, doesn't look. It was stuck. Preferred's price at 10. Yield is probably about 6. Okay, in the last month, this thing is trading down to 85. It's yielding almost 8.5%. So they're looking for a debt restructure. If it doesn't come up, these bonds are a layup. But anyway,
that's hold that up again for a second.
You want me to hold that up again?
Please.
Do I have any personal information?
I was going to say inside info all over that thing, probably. Oh,
no.
There's some messages below.
No. Okay, wait. Wait, sell. No, I'm kidding.
Larry, show me the message that says bring home the milk. That's a Bloomberg chart. Anybody can have that.
I understand, but it's
Larry,
the GE
it says bring home the milk.
Anyway, I'm getting off. We have a good schedule today. We'd like to sell into strength. Up 850 on the S&P is not enough. We'd like to see it up 1415. Got to get the computers kicking in. Oil, another leg down. We're stopped out by puts. We're going to have to roll again. Not looking good on that, but that's counted already as a loser. And we're stopped basically at the level. Keep an eye on Goldman dropping below right now, 204. Look at the 200 area there. They might punt that thing down. Apple has no bid. Look below the 190 area there for a long. And other than that, again, I'd like to sell some strength. This opening is not strong enough to really get short. Market looks bad, but we will see. Bonds are lower, but off the low, and we're doing a lot of chatting today, so it's only 10 minutes before the opening. I want to get off, get ready, and I wish everybody good luck, and we'll be back in the chat after the opening. Everyone have a great day. Thanks, Vince. Thanks, Mike.